Welcome back to the show, everyone. Joining me this week is Eric Balchunas, Senior ETF Analyst with Bloomberg Intelligence. It's been a while since we've chatted, Eric. I had you on when those spot Bitcoin ETFs were finally approved in January and started trading. So first of all, I would just love to get an update from you because your whole focus is this industry. And I want to get your reaction on how the ETFs have been going this past year, 3 quarters.
Yeah, I know. I've finally caught up on rest since we talked last. Basically, January 11th was the day they all launched, and now we're 9, 10 months since then, and they've definitely defied our expectations. So James Seifert and I had predicted they'd get 10 to 15 billion in net flows in the first year. They're at 24 billion. Now they could come down. That net flow number is fluid. If people were to pull out, the election is a big variable. Let's say there's some kind of a crisis, and Bitcoin has a downturn. We still could be right. That said, I think it's looking good because there's been a couple downturns, and the flows, that net number has held real tough. The holders are definitely good at holding in the ETF case. So I think it's amazing what they did. They broke all kinds of records, no matter what metric you looked at. They broke the record or were close. And if you kind of take a step back and think about it, it kind of makes sense. First of all, these products are ETFs are the premier vehicle for investors right now who are, let's say, normal investors, 60/40 types. They love the ETFs. I mean, they can't get enough of it. It's like putting your song on Spotify. It is where the fish are biting. It's where the listeners are. So to have Bitcoin and ETF just puts them in the sort of main area where mainstream investors can get it. So I didn't think they grow this quickly because, like I said, 24 billion, it took gold like 4 or 5 years to get to 24 billion in cumulative net flows, just for some perspective. So there's a lot of superlatives we could use here, but my God, what a launch. And it's just the beginning. I think this category is going to continue to grow over the next 5 or 10 years. I think there's obviously variables we don't know. There's black swans, there's really good variables, some catalysts. But I think at the end of the day, it seems like this is an exposure that a lot of normal 60/40 investors are looking to get. And I think having BlackRock and Fidelity and some of these other big firms behind it, sort of giving their okay, is major. And them saying that, hey, this is actually a decent thing you can put in your portfolio. To me, the ETF undid all of the SBF price depreciation and reputational damage. I think the ETF came around and in good timing, and it kind of like the price is back to where it was, and the reputation it's got legitimized now. So I think I think everybody benefited from the ETF. Certainly, they're getting their flows. They get a little tiny part of that as a fee, and the Bitcoin people got they erased a lot of that drama and damage, I think, with the ETFs.
Can you talk a little bit more about how the spot Bitcoin ETFs compare to the other ETFs that you analyze? You mentioned that obviously they ascended far faster than the gold ETF did. So can you talk a little bit more about that and why these are so unique?
Yeah. So first of all, I dedicated my career to ETFs. And in the Lugano conference, which I saw you at, which you did a good job interviewing the wife of Julian Assange, by the way,
Thank
for anybody
you.
who missed that. I think it's probably on video somewhere. But anyway, I had a 40-minute presentation, 30 minutes, and my main message was that ETFs are not necessarily Wall Street, and that they are a disruptive powerhouse. Wall Street doesn't necessarily like ETFs. They don't charge a lot. They don't make a lot of money for the industry. They are lean and mean, right? They're hell for issuers, but heaven for investors. And so to me, the ETF and Bitcoin have a lot of spiritual connection in that regard. And I wanted to make that point. It's a powerful combo. So I have seen a lot of launches, and I've no doubt that ETFs are penetrating a lot of asset classes. They just happen to penetrate this one a little quicker. So for example, if you take the amount of each asset that ETFs own, they own 9% of all the stocks in the US. They own 4% of the bonds. They own 1% of all the gold above ground. But they already own about 6% of all the Bitcoin within a year. So remember, they were 30 years to get to 9% of stocks. So they're already halfway. So in terms of their impact in an asset class, they've never had this fast of an impact. And what's ultimately going to be a greater impact, because I think that 5% is going to go way past 9 pretty quickly. And so as I told the crowd, we're married now. There's nothing, you can call me TradFi, the suit, boomer, whatever you want, but I'm not going away. We are here now. We are joined at the hip, and for better or worse. And in my opinion, I would just look at it as the ETF is essentially somewhat playing the role of the exchange. It's just for people who don't want to go all the way and get their own wallet. This is a way to outsource it. It just happens to be a very high value proposition. So for people looking to outsource, this to me is going to be the premier intermediary of people who want Bitcoin who don't want to get it themselves. And I just look at it like that. But I just think that the whole this is Wall Street TradFi boomer. I don't think all that's necessarily true. I think ETFs are favored by younger investors. Again, Wall Street doesn't love them. So I just think they're a little mischaracterized sometimes. I think anything relative to Bitcoin can seem TradFi from coming from that world, but ETFs are not like other things. They're not really like a hedge fund or a mutual fund. They're much more lean, mean, and they're disrupting the heck out of the market that they operate in, right? They're going to take almost $1 trillion in this year. So that 24 billion is just one tiny part of $1 trillion in flows. So I have watched them do this to many asset classes, but not at this pace and not this intensely.
Coin Stories is proudly brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and AI. As a publicly traded leader, Bitdeer boasts a massive 2.5 gigawatts of electrical capacity and infrastructure under development across 3 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Bitdeer's leadership pioneered the original advancements in Bitcoin mining ASICs and is now poised to disrupt the market again with groundbreaking new designs for the next generation of mining ASICs that are targeted to reach efficiencies of as low as 5 joules per terahash by late next year. Now they're leveraging years of expertise in data center and cloud management into high-performance computing through a partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today. What are people selling in order to buy these spot Bitcoin ETFs? Are they shifting out of the gold ETFs or SPY? I mean, what have you seen from the data that you analyze?
So the one thing that people especially bigger institutions like about ETFs is they're anonymous. We don't, unless they have the 13F, the bigger institutions do have to file a 13F. So we can see some holders, but the 13Fs are a minority of who owns them. So it's tough to say exactly who's coming from where. My guess is might be people who are using the exchange who are now using the ETF. There could be someone who, I think a lot of people are new. I think there is some fresh cash. I mean, how could there not be? I mean, you have the price was 25,000. It's now 68, 70, something like that. That's a long way to go in 16 months. So I do think there's some new and some people who might have bought it a different way are now using the ETF. I've heard of some Bitcoiners who use the ETF because that's the only thing in a certain kind of account they like, right? It's in a certain investment account, the ETF's available. They can't really buy crypto directly there. So there's even people who might be hardcore types. So when you think about that $1 trillion of ETF flows I talked more broadly, some of that is stealing from other places. And that's just the way it goes. Mutual funds are getting, ETFs steal from mutual funds. I think they steal from the derivatives market. I think some people use ETFs over futures contracts. They steal from the options market. They steal from single securities. You might want to buy, say you're into Brazil. I'm going to buy the Brazil ETF because I don't want to research all the stocks. That money might have otherwise gone to a couple Brazil stocks. So ETFs to me are a Swiss Army knife. They're able to be whatever you want them to be, a trading tool, a long-term investment. And so I think they're going to pull money from other places. Nothing wrong with that. It's just hard to tell how much is new. I will say this, if you look at the holders, there's 1,200 institutional holders so far, which again is absurd. A normal ETF that's a new category would have like, if they're lucky, like 15 to 20 holders, right? We're in 1100, 1200. I haven't seen, like, there's nothing they reported before this. So all the 13Fs appear to be new. Now, maybe they had their own wallet. I don't know. Like, but they didn't sell out of like, there's no evidence they sold out of a stock, like a miner or MicroStrategy, some proxy. It looks like they're all new investors to the ETFs, but um, it's like I said, you don't know. I think there's just a mix of both.
That's fascinating. Talk to me a little bit about options trading, because I believe it was just approved for only IBIT. Will it happen for the other ETF issuers, and how big of a deal is it? What's the significance?
Yeah, well, so there's the SEC actually approved for more than IBIT. They're all going to get approved, and they're all going to have options. The next thing we're waiting for is the CFTC, which is a regulatory body that uh, has to. It's like a dual approval process. But anyway, I'm hearing good things. I'm hearing that that body is good to go, and that ultimately we're going to get the approval. Now, we're coming into the election and then Thanksgiving and Christmas. Do we get it like in that time? I don't know. Could just be too busy for people who are in like regulatory world. We'll see. But I think by Q1, almost guaranteed. So I just a little longer. We wait 11 years for the ETF. Waiting a year for the options is it's a long time, but relative to 11, it's not bad. But when the options come, what's going to be good about that is that when you are a bigger investor in particular, you can use options to sculpt what you want out of the returns. You can hedge a little. You can. It's almost like a painter having more than primary colors to paint with. Finally, you got like 12 new colors. So, because I know with ETFs, there's a lot of people who put options into ETFs to create all these interesting outcomes, and then the ETF uses options. So, options to me are sort of like, again, a painter having like a multitude more colors. And so if you are a professional and know how to use options, you're going to love options on Bitcoin ETFs. And so we think they're going to help bring more people into the ecosystem for sure. Gold, like GLD, has a lot of options activity every day, to the point where if you took the exposure to gold of the options, it's not exactly like a tit for tat way to do it, but the notional value is about 3 or 4 billion, and GLD only trades 1 or 2 billion a day. So they're notionally trading options of worth GLD more than GLD trades.
Wow.
Anyway, so just to give you an idea that it is a big deal. And interestingly, right now, I think people are using options on these other ETFs in while they wait. The MicroStrategy 2X ETFs, their options is already like, it's just exploding. And essentially that's options on like 4X Bitcoin, because MicroStrategy is 2X Bitcoin and these are 2X MicroStrategy. So I think those will, even if Bitcoin spot options come, those will still survive, because that's like the King to Ka Great Adventure. If you're a roller coaster, I mean, that's like a whole nother level of fun over there.
Yeah.
But I do think the spot options will grow bigger than those. But all of these options around these products is amazing. It just builds a whole liquidity ecosystem within the product, and allows for just a lot of people can express their opinions and build portfolios better.
Right. There are going to be more and more proxies for Bitcoin exposure. I actually wanted to get your take on what MicroStrategy has done. Some people thought that after the ETFs were approved, that maybe people would pivot out of things like MicroStrategy stock, but instead it's just exploded. What do you think about that?
I just feel like Michael Saylor is kind of like the spiritual leader of Bitcoin, and I think that that stock has this premium that you almost want to go, why would I pay a premium for Bitcoin? But I just think he's, people like him, and they want to have that little extra juice. Seems like the stock will go up a little more. It's like I said, it's 2x Bitcoin. If you look at the volatility of Bitcoin, I think it's around 40%. MicroStrategy is 80%. And this is part of, I think they like the volatility, because when these 2x MicroStrategy ETFs came out, the first one came out, and I was shocked at how fast they grew. Leverage ETFs, like even the 2X NVIDIA ETF, which is now $5 billion, it took a couple months for it to get its mojo. These got mojo right off the bat. I mean, they're both about $500 million. They trade over 100 million a day. They're both in like the top 2% most liquid ETFs already. And these are wild products. I mean, you're talking, it's equivalent of 4x Bitcoin.
Hmm.
So it just seems to be something about Bitcoin and then MicroStrategy that just people like. And I talk to people sometimes and they're like, if you're a trader, you got to love this space. This is just a fascinating world because you've got the spot market, you've got the ETF market, you got MicroStrategy, then you got like all these weird derivatives in Asia. So if you're just like in that, you can really have fun. There's probably a lot of arbitrage opportunity. And so I just think that for an area like stocks can be a little boring these days. You know, the market's up 20%. A lot of people just buy passive, put it away. It's hard to beat that anyway. And I think so the trading crowd and people who like to trade a little part of their portfolio, I think they're very attracted to MicroStrategy, Bitcoin, and the ETFs as well, because there's a lot of volatility and differences out there between different ancillary products, MicroStrategy being one of them. But it is interesting. You would think that a premium would deter people just to buy Bitcoin and not, and the premium would collapse, but it hasn't really. So I'll defer to you on that a little bit, but I just feel like MicroStrategy's kind of like got a kind of a following. Do you know what I mean?
Mhm.
And people just, you know, I sometimes say when there's somebody making movies, like I have certain actors I really like, and I will try to make my way to the movie theater to buy the ticket just because I want Hollywood to keep giving that person the keys.
Hmm.
Do you know what I mean? It's almost like voting. It's like I want to actually go to the movies, like Daniel Day-Lewis is my favorite. I'll go to the movies, pay the like I'll go out of my way to actually purchase some things as a way to vote as a customer. And there might be some of that going on here
Hmm.
with this sort of crypto crowd. They might be buying it just because like I love this guy. That's my take, but you might even know better than me. That's just my outsider opinion.
Well, I think a lot of traders love that volatility. As Michael Saylor himself says, volatility is vitality. And I know a lot of people that have done very well from just spot Bitcoin, but I know people that have done extremely well buying MicroStrategy stock, and I'm very happy for them. All right, I want to ask you a little bit more about BlackRock because BlackRock's actually been starting to put the ETF into some of its funds and other portfolios. Can you talk to me a little bit about what that means, and will other asset managers maybe do the same thing?
Yes, and yes. So BlackRock, speaking of spiritual leaders, you know, Larry Fink is a one of the leaders of the asset management industry. I mean, they're the biggest by assets, 11 trillion. I think it's maybe 11.7 trillion. And so when he goes on TV and says this is good for portfolio construction and the ETF ends up in some of their funds, it hasn't yet made their ETF model. That's sort of the holy grail within BlackRock. Once they rotate into IBID, that'd be a huge news. It hasn't happened yet though,
Oh.
which is unfortunate. They would have made a ton of money if they rotated into it early. I think it was a missed opportunity, but they might have wanted to avoid the appearance of like nepotism or, you know, because their models bought their ESG funds early on and then had to get out of them after they underperformed. Maybe they just were once bitten, twice shy. But either way, I do think ultimately, you know, this stuff that will make it into the model. I think there's a lot, but more important than even the models is just this army of salespeople who speak fluent boomerese. You know, when you go out there, you know, speaking of, this is like a messaging from messengers who are used to dealing with these kind of investors. These are, you have to think that the advisors of the world have career risk. They don't want to get fired. They always play it safe, you know, and we have a phrase on the team. There used to be a phrase that a broker could never be fired for buying IBM. This is in the 80s and 90s. If you have IBM, it's not like your client can ever get them mad at you. But let's say you went on and bought some crazy international stock and it went down, like that person might get fired, but you can't get fired for buying bread and butter. The new IBM is an iShares or Vanguard ETF. So advisors love the safety of knowing I'm buying iShares and Vanguard. You can't fire me. Like it's too, you know, it's very prudent. So for iShares to be on the label of a Bitcoin ETF is major. It's like putting IBM next to it. It's a peanut butter and jelly brand that the advisors really like. So this is a big deal. And plus they're able to communicate to the advisors. You saw that 11-page white paper. They went over the case for it, which included the purchasing power of the dollar declining.
Mhm.
It's very well written, and they're lucky to have Robbie Mitchnick in there, who really is fluent in this world. But then you got someone like Jay Jacobs, who is not a Bitcoin person, but he is used to do thematic and theme ETFs at Global X. But he is really good at just selling and communicating ETFs in a way that's very palatable. So Fidelity's got the same people, Invesco's got the same people. You add it up, you've got firm after firm after firm with a lot of these people who are good at it. And they're probably going to start putting them on. I think Fidelity put it in one of its Canadian models. So there's also a herd-like mentality to this whole world that I operate in. Like, if enough advisors do it, then some advisors will be like, I have to do it so I don't get fired for not doing it. There'll be like that kind of effect. It hasn't really had that tipping point quite yet, I don't think. I think the advisors we see in now are like early adopters, and the institutions are early adopters. But the more that grows, it's sort of the scales get tipped to, well, maybe I should hold it too. And next thing you know, that's when you get that tipping point that kicks in. So I think that's what so when I argue with, not argue, but when I get crap from these people on Twitter, just in general, like, they're so focused on like one day, 1 week. They're like, the flows came in, but the price went down. I was like, look, just relax. Keep your eyes focused on what's really happening here. It's like you're on a team and you just acquired like 3 of the best players in the league. Larry Fink, Abigail Johnson, right? Matt Hogan, right? You've got superstar players now on your team explaining the Bitcoin concept. Just let that play out a little bit. Okay, you're not going to win the Super Bowl in the first game. Like, just chill. Not to mention the price has gone up a lot since the BlackRock filed. That's 25K to 70K is pretty good, outperforming everything. So over time, these models will happen. The advisor tipping point will probably take place. So I just think like a lot of this takes 3 or 4 years to play out. So I think this Bitcoin ETF thing has been sped up. So like the first year is going to be what it normally takes 3 years. So while it is happening faster, it still does take some time to get some of these people to move their money and have an account there, because you have to understand, if you're a 60-year-old advisor and you've got a lot of rich boomer clients, you do not want to lose them. I mean, you make a good amount of money being their advisor. Yeah. So they're a little nervous, and SBF was like 2 years ago. So I just think it's gone a long way since then, and the trajectory is really nice. Don't rock the boat, have patience, but it looks really good.
Yeah, no, pretty soon I think it'll be a career risk not to recommend at least a little bit of exposure to Bitcoin. You mentioned.
Wait, let me say one. Can I say one more thing about this? Because you reminded me of this. This is one of our themes, which is that the thing about the Bitcoin ETFs and why we think they're going to pass gold ETFs and maybe triple gold ETFs over the years is because gold is used as a way to hedge inflation and the dollar devaluation similarly. But gold is real boring. Like, it doesn't move a lot. I know it's up pretty good this year, but it's Bitcoin makes gold look like a money market fund. Okay, so the volatility of Bitcoin is a feature, not a bug, in this current world. And the reason I say that is because so many people have moved a lot of their core portfolio into a cheap Vanguard index fund or BlackRock ETF, and they're married to it. They're like, I'm good. I'm going to wait 30 years for this to compound. It's boring though. So they got a good investment there, but they looking for a little action, like some spice on an otherwise dull meal. Gold doesn't give you the hot sauce spice kick that is really in demand right now. So to me, with Bitcoin, you actually get a 2-for-1. You get the hot sauce because it can go up and down quick, and you get the store of value. And so for that reason, that's why I think it does have more potential than gold did. And that's the usage in the portfolio that is practical versus gold, which is, to put gold in a portfolio that you have 60-40, you almost have to just want an alternative. Whereas here, I don't even know if Bitcoin is an alternative. To me, it's more of a risk on high beta kind of thing. But either way, I just think its volatility gives it something that is in demand now that gold that doesn't really have.
It's time for a quick break to hear these messages from my partners who make this podcast possible. First up, Casa. It is so easy to set up your Bitcoin 3-key self-custody with Casa that I can show you pretty much the whole process in just 30 seconds. You're watching it right now. I recently switched to Casa for multi-sig collaborative custody and inheritance planning because of their enhanced non-KYC required privacy and the ease of this mobile app. Make sure to watch the tutorials and get your Casa plan for 10% off at casa.io/Natalie. Next up, Speed Lightning Wallet, one of the fastest growing Bitcoin wallets out there. Speed is a secure, low-cost way to send and receive Bitcoin and stablecoins instantly. The app is super simple to use and customers love it. Download Speed using the QR code on the screen or the link in my show notes. Use promo code CoinStories10 to get 5,000 free sats. And finally, are you ready to take control of your wealth? The Bitcoin Way is here to empower you. Learn how to take full self-custody and eliminate all counterparty risk. Set up your node and become the master of your own transactions and enjoy true autonomy. And upgrade your cybersecurity and protect your online privacy like I did. The Bitcoin Way specializes in personalized one-on-one training to help you become fully self-sovereign. Schedule a free consultation today. Yeah, it has such an asymmetric risk return profile. Okay, so you mentioned Larry, Abigail, Matt. So that's BlackRock, Fidelity, Bitwise. And the first time that we talked about all these ETFs back in January, you discussed the race that was happening, that all these issuers are going to be jockeying for first place, which IBIT currently has. Can you talk a little bit more about that? And how do you see this evolving? I mean, are all these issuers going to even exist in a couple of years? How's this going to work?
Yeah. And by the way, you got Kathy Wood in there. You've got Alex. I mean, I didn't mean to just single those three. Those are just the three that popped in my head quickly. Matt, Bitwise is smaller, but I'm telling Matt is next level communicator. And he's more on the road talking to people than Abigail Johnson. But Abigail Johnson is Fidelity is like, anybody over the age of 40, 50. Fidelity used to rule the world, right? So anyway, my point being is that even these legacy managers getting into it, again, provides a lot of cover. So the horse race, obviously IBIT is the GLD. Okay, it's over. IBIT won, and I don't think it'll ever look back. It's the most liquid, the biggest, and it's BlackRock who's the biggest. So it's like, who could even come along and even challenge that? Probably nobody. Done deal. Now, everybody eats though, because even the last place one, which is Wisdom Tree, I think is around $300 million. That's really good for your first year. If you get 100 million in your first year, you're in good shape. You're happy for a normal ETF. So the last place one is 3 times what would be a good year.
Wow.
If you're over 30, 40 million as an ETF, you're break even. So like in your first year, if you get like 40, 50 million, you're like, okay, cool. We're a little above break even. Maybe next year we'll get 100 million. That's how big these are. That the last place one is already considered a hit for a normal fund. So they're not going away. None of them are going away. In fact, I was talking to the woman who runs State Street's ETF business, and I was like, I can't believe you guys haven't filed one. And she's like, well, it's crowded, and I'm like, but here's the thing. If you take all the Bitcoin ETFs and divide the assets by the number, there's an average of like 4 or 5 billion per product. The average asset per product in other categories is below $1 billion. Like for thematic ETFs, it's like 400 million.
Wow.
So this is 10 times the average product so I can't believe there hasn't been some of these other big issuers going, oh, let us get some of that. Because 4 or 5 billion per ETF tells you there's more demand than supply. When ESG came out, there was so many ESG ETFs, there was only 250 million per ETF. And we were raising the flag saying there's way too much supply. And that's when we got both bearish on ESG. We're like, I think this is way overhyped. This is the reverse. And so I think you'll see other issuers come in. That's how, but to answer your question, none of these would go away. They're already profitable. So.
Got it. You've brought up Vanguard a couple of times. You wrote a whole book about Vanguard's founder, the Bogle Effect. I've been reading it. It's very, very interesting. And I know that index funds really revolutionized how Main Street invested, brought down fees. And looking at Vanguard, they're very behind on Bitcoin. A lot of people moved away from that institution so that they can get some exposure to these spot Bitcoin ETFs. Why do you think that Vanguard is not hopping on this wave, and do you think that'll change?
So there's 2 reasons I think they'll change a little, but it'll take time. But the reason I'm not hopping on the wave is that Bogle, the guy who founded Vanguard, who I wrote the book on, who, by the way, he gets a lot of crap in the crypto world because of this Vanguard ban, but I'm telling you, this dude was punk rock. He basically took all the intermediaries out of asset management. I call it addition by subtraction. He took the expense ratios out, the trading fees, the brokers. So in a way, he is as disintermediating a force as Bitcoin is as well. I promise you. Now, so they have there's a spiritual connection, I think, between Bitcoin and Vanguard. But the problem is Bogle generally didn't like commodities. He thought that a commodity was only worth what someone else would pay for it. Whereas a stock has this sort of investment return. People create value. Like at Microsoft, they wake up, they go to work, they make all these products, they sell the products, and then some of that gets passed on to you in the form of dividends. So you get paid even if there is no speculation. And he likes stock investing for that. And then bonds, you get a coupon, right? You get a payment for lending someone your money. So your money works for you in both of those asset classes. And he was real into that. He didn't like the oil and the gold generally. But long story short, that's where the heart of the problem comes from. But Vanguard has changed a lot over the years. Two things make me optimistic. One is that Vanguard is trying to start and grow its advisor program. So as I mentioned those advisors before, Vanguard is now an advisor. Well, if you're an advisor, you can't not have stuff. You got to have access to private equity, to crypto. You can't tell people no. As a fund company, you can say we're not doing that, and the advisor can go, okay, I'll go to a different issuer. But as an advisor, you have to, you need access to stuff. Mm-hmm. So I think over the years, they might be pressured to lighten up. Number two, their new CEO is named Salim Ramji, and he's IBID's father. He came from BlackRock, and he was the one who greenlighted and saw through IBID's launch. And there's a great LinkedIn post of him taking a victory lap. Oh, isn't this great? We did this. So in the back of his mind, he might, if there's an opportunity, he might be, willing to open up about it because he clearly was okay with it at BlackRock. But he's going into Vanguard, which there is a little bit of a cult-like thing there. And I think Vanguard took some pride in slapping Bitcoin around a little bit. And I think that was even a marketing tactic a little bit to appeal to some of the more traditional investors, sort of to say, BlackRock's going all in on this thing, and we're going to actually stay the course and do this thing. And maybe it was a way to signal to some investors that they're different. And I don't think it was smart, though. I think over time, even if you don't like Bitcoin, I just don't want my company being a nanny. Vanguard investors are very smart. They can figure out, I don't want to buy the Bitcoin ETF, because what they did is they didn't even let it on their brokerage platform.
Exactly, yeah.
But they let gold. So it was a little personal, in my opinion. And I wasn't a fan of it, but I am a huge fan of them otherwise. I'll just leave it there. But I'd have optimism, but only in the medium and long term, not the short term.
Yeah, I was very surprised that they made that move and to not even have it on the menu so that the investors can decide. But I think that will cost them a little bit in the future, although the CEO sounds like he might turn things around. I have heard you call Bitcoin the Second Amendment of money. What do you mean by that? And can you talk a little bit more about just your own journey with Bitcoin and this asset class?
So that's a quote I got from this guy, Ben Hart, who wrote this book, Introduction to Bitcoin. I first saw him because he's had this viral video with his daughter, and then he had the Bitcoin shirt on. And anyway, long story short, when he was talking about Bitcoin on this one, I only saw the first 2 minutes of it, but he said it's the second amount of money. And I thought about that, and then actually read his book. I thought his book was really good. It was a good primer. I get it. I mean, that really crystallizes it because you are essentially getting protection from your government, which generally likes to print money to solve problems. If you think that both parties are going to take the easy road, which is throw money at a problem, whatever may come up, then you're looking at, you need protection from that because they're going to purposely devalue your currency as an expedient way to get out of a problem. We've seen the Fed do it many times. So if you believe, it's very basic. You don't have to be a huge gun person even to understand it. You could want protection from your government this way and not guns. But I just think that saying it that way crystallizes it instantly. And especially in emerging markets, you really need protection from your government in terms of monetary, currency. So that is where I got that. But I'm a fan of distilled phrases that package up something really quickly. And I was like, that's a keeper, I thought. The other thing I thought, and I said earlier, is I just think Bitcoin's literally 16 years old. So it's literally at peak teenager, which means attitude, volatility. It's probably going to steal the car. It's going to go out, it's going to talk back. And so to me, it's just like it's teenager gold. It's as if you could take the 4,000-year-old gold and go back to when it was 16 years old, it was probably behaving similarly. So I think those are two ways that I've come around on it. And I've also really, I didn't know that Bitcoin was I'm a big fan of where do people get ideas, right? And so the idea that some of this technology is actually sourced from the military in the Cold War, right? Just in case we were in the Cold War with Russia, in case there was a nuclear explosion or something like that, a decentralized network would be a way to keep the U.S. military going, right? Because they could just go and drop something right on Washington. So this idea of a decentralized of Bitcoin somewhat being based off of like military grade intelligence and a design is kind of interesting to me because I get that. So here you have something that's decentralized that nobody can mess with. And if you understand that paradigm of the Cold War, you're like, I really get that. So there's a couple things that happen along the way that help me crystallize that this is much more than some like internet money token, and so and the people are very smart. You traverse in this area. There's definitely some whack jobs, like on Twitter, I definitely get some people. I'm like, this guy's got to be in his parents' basement. I mean, there's no way. But there's some really intelligent people here. And it's relentless. It should have died like 5 or 6 times. It comes back, like a cockroach on steroids. And so I got to respect that. I mean, so all those things have maybe come around on it in a way where I respect it. I'm still not ready to go I wouldn't go all in. I'm the kind of person who the ETFs are drawing in, a 60-40 investor who might put 1 or 2% in it. I wouldn't go full portfolio Bitcoin simply because I still have that Bogle of like wanting that investment return from stocks and the coupon from bonds. I believe that's very valuable. But I get it. Now the other coins, as you go down the spectrum, sometimes they get a little harder to get as into, to be honest. I also think that the security of Bitcoin is really great, and the decentralization is true. It's got it all. The other coins remind me a little more of like a speculative tech stock, whereas Bitcoin is much more like gold, in my opinion. So it's just different. I don't know if that's what you're looking for, but I definitely took it was a journey here for sure. But I read up on it because I needed to know some things about the ETFs. James Seyfert helped. He was already here.
Yeah.
So he's been a great guide for me.
No, it's an interesting space to navigate. And you kind of alluded to Bitcoin being anti-fragile, which even Fidelity has written about in reports. But thinking about all the intelligent people, as you said, that are in this space and big believers now, when you're starting your journey, I mean, this happened to me. I was like, there has to be something here if these people believe in it so much. And I think a lot of people, and now that you see these legendary investors sort of coming around, what we heard from Paul Tudor Jones recently.
Yeah, that's big.
So many people, right? But are you allowed to invest in Bitcoin? Do you share your allocation? Because I thought that also if you're analyzing the space that you can't own some of these products. Is that the case?
Yeah, it's tricky where we work. Like you have to ask for approval, and ETFs are a little bit of a workaround for a lot of people because ETFs are funds, not the actual underlying. But I generally don't. I'm very boring. I have a very boring 401k 60/40. I generally don't invest in anything. Like there's times I have a really strong idea. Like I was really bullish on uranium before it was cool. And it was tempting not to try to get into that. But I do so much talking about these ETFs. I just don't want anything in my brain to influence me. So I don't really invest in much. I keep it strictly unbiased. But I can see as soon as I leave this job, I might manage a portfolio. We'll see. But for now, I just have a very simple portfolio, and it's for the best. But there's definitely some rules with our department because we talk about this stuff. Although we don't make calls, we don't like we
Right.
have no price predictions. We can't give investment advice or say like buy sell.
Mm.
But we do cover this stuff a lot, and you don't want an analyst being like biased and not know it. Obviously, we have clearly problem with that in other
Mm.
media forms, and you certainly just want objective information. I think I deliver that. That's my goal anyway. Um, so yeah.
It is interesting. I mean, a lot of us hope that you have this Bitcoin stash that you're accumulating, because if you're not allowed to own it at all, I feel like that also can influence you with analyzing. And I've heard that several of the agencies in Washington, for example, won't allow their members or workers to own Bitcoin. Like I believe the Treasury doesn't allow you to own Bitcoin because it's a conflict of interest or something. So yeah, it's definitely, it makes you wonder who's making recommendations when it comes to things like regulation and all of that. If they're prohibited from owning Bitcoin, you're going to find a bunch of people who are not into Bitcoin, obviously making those decisions. Well, before we wrap up, I did want to ask you just really quick about the in-kind redemptions versus cash. Can you just maybe give a summary of that? And do you see things changing maybe in 2025?
Well, I mean, look, if Trump wins, anything's possible. It's just like Pandora's box will probably open because they're going to put a SEC chair in there that's probably going to be much more libertarian. That said, the guy under him last time, Jay Clayton, he wouldn't approve the ETF either. So I do say that with a little caveat, but I think that given the crypto support he got or felt he got, he would be different this time around in terms of allowing a more crypto friendly SEC chair. If Harris wins, I don't think you get hardly anything. I think it's what you got is what you get, and it's just like pack it up for a couple of years. But with Trump, the in kind creation redemption would be beneficial. We're all for it as analysts, and BlackRock's for it. Everybody's for it. Um, Maybe I don't know, but and also staking in the Ether ETFs. That's something that everybody's for, but they don't allow. So I think over the next couple of years, obviously we have a big crossroads,
Yeah.
to say the least. So whichever way we go, I think if it's Harris, just expect more of the same, which is denials, pushbacks, rejections, postponements. Trump, I'm not saying it's like approve everything immediately, but it probably safe to say it's going to be much more optimistic in getting some of this stuff approved, including the creation redemption, the in-kind creation redemption, which again, I kind of get why the SEC did that, but I just think the ETF's track record is so strong on this, and investors would benefit if it was in kind. So
Yep.
it wouldn't be hard to convince someone who's not Gary Gensler of that. I think so. Like I said, it just depends.
Yeah. Well, we're going to have some answers. So this interview we're recording the day before the election. We're releasing it on the day of the election. We'll know something in the days ahead, maybe. All right, just some final thoughts, Eric. Really enjoyed this conversation. You've shed so much light on the ETFs, and it seems that we are in the institutional era of Bitcoin, and I'm very bullish on that.
Yeah, this is again, this is a bridge. It's like the first bridge built between two land masses. You've got the mainstream retail institutional world here and the Bitcoin world here. To me, the ETF it's not just a bridge to it, it's the best bridge. It's a wide, sturdy bridge, and it's a trusted bridge. So, look, ETFs, whenever they get launched in the space, they end up getting assets. They're very, very high value proposition instruments. And so over the next couple of years, the advisors are likely to adopt it in small increments, but all that movement and all that money will create liquidity, and liquidity is what the institutions love. They can't get liquidity anywhere else. So, and everybody I think is going to use it for portfolio completion. Like it's liquid and then plus some trading. So I think the institutions will come over time as well. There's been a couple institutions, but if you look at the holders of SPY or GLD, I mean, it's just chock full of the bigger asset owner institution types. But these aren't quite there. Again, they're still literally, by definition, infants.
Mhm.
GLD and SPY, GLD is a full-fledged teenager, and SPY is basically in its 30s at this point. So you're talking about something that's not even a year old. So the future is very bright. So, I mean, if you extrapolate some of these numbers, it just gets ridiculous. So the question that we all have to think about, though, is what's the black swan event? Is there some kind of a meltdown? Because I think these investors are going to be able to stomach a 20%, even 30% drawdown pretty good. Like, I think they're going to be strong. But what if there's an 80% drawdown? You know, I don't know. We'll have to see. But remember, the QQQ ETF launched a year before the internet bubble burst.
Mm.
And that thing's got hundreds of billion dollars. Everybody loves it. So even if there is a huge drawdown, it doesn't, the ETF will live on past it and it will be part of the ecosystem going forward. So even in that total bad case scenario, you're still looking at long-term viability.
Yeah, no, absolutely. Bitcoiners are used to these kinds of drawdowns. I guess the ETF holders will get used to the volatility too. But it is fascinating to see people like Larry Fink acknowledging that this is the birth of an asset class. It's just emerging. We're at the launching pad. If people think they're late, they need to look at it differently, because just because you didn't buy Bitcoin at $10 does not mean that you're late. We're at the start of what this is going to be, and 1.234 trillion, whatever it's worth now, is not indicative of what it will be. And I think that is really exciting. All right, Eric, where can people find you and your work?
Well, if you happen to have a Bloomberg Terminal, BI ETF Go, but guessing if you don't, you can find it for free two places, Twitter at Eric Balchunas. I post there a lot. And then also I have a podcast called Trillions, which you can get like on Spotify or anywhere you go. That's also free.
Well, and I'm loving the Bogle Effect. I really am. I
Thank
started
you.
it recently, so can't wait to finish it. I hope everyone checks it out. And thanks so much for taking the time to join me again.
Yeah, thanks for having me. Good to see you.
Thank you so much for checking out this episode of Coin Stories. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open. If you want to share feedback or guest suggestions, just reach out at natalie@talkingbitcoin.com. Make sure you're subscribed to the show and check out my free newsletter, nataliebrunel.substack.com. I'll see you next time.